As retirees look to secure their financial future, Delaware Statutory Trusts, or DSTs, and triple net lease properties emerge as prominent passive investment options. Triple net lease investments entail a tenant being responsible for property expenses, including taxes, insurance, and maintenance, besides the base rent. The landlord receives the net income, making it relatively passive. In contrast, DSTs involve investing in a trust where investors don't own the real estate directly, but have a fractional ownership in one or more properties managed by an investment sponsor. DSTs provide greater diversification as they can include a variety of assets, allowing investors to mitigate risks by spreading investments across different property types and locations. However, DSTs lack liquidity, with typical holding periods of 5 to 7 years and the sale of the assets controlled by the sponsor. Triple net lease investments allow landlords to decide when to sell, offering better liquidity. Ownership structure differs too. In triple net lease investments, investors are decision makers, while in DSTs, investors are truly passive, with the sponsor handling property management. For estate planning, DSTs are advantageous as investments can be directly divided among beneficiaries, giving them individual control over their shares. Those who are considering selling their real estate to access a passive investment can reach out to the team at Perch Wealth. Our team would be happy to answer any questions you may have. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC, only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.